Kansas Ag Report. I'm Ken Rogers. On this week's program, we talk with Dr. Roger McEowen from the Washburn School of Law. He is an ag and tax law specialist for very important topics that we're going to discuss with him. We'll also have features from the Kansas Soybean Commission, Kansas Department of Agriculture, Kansas Grain Sorghum, along with the weekly update from the Kansas Livestock Association and market information from Pinion.
Kansas Ag Report brought to you in part by the Kansas Soybean Commission. The Soybean Checkoff, progress powered by Kansas farmers. Kansas Farm Bureau, a grassroots ag organization representing the state's farm and ranch families since 1919, kfb.org. And the Kansas Wheat Commission, lending in the adoption of profitable innovations from wheat, online at kswheat.com.
For the second straight month, farmer sentiment improved. The Purdue University CME Group Ag Economy Barometer as it climbed 5 points. November's 12-point rise in the current condition index to a reading of 113, primarily responsible for this month's sentiment improvement, as the index of future expectations only improved by a couple of points. Both sub-indices exceeded their year-ago level in December, and the current condition index increased by 15%. The future expectation index up 11% compared to where we were in November of last year. The improved perception among U.S. farmers regarding their farm's financial condition and prospects contributed to this month's more positive sentiment reading. The Farm Capital Investment Index also rose in November, although respondents who said it was a good time to invest were more likely to point to rising dealer inventories of farm equipment as the reason for a little stronger cash flows there on the farm. Farmers continue to be relatively optimistic about the future values of farmland, and the short-term financial farmland index held steady. The long-term index, though, did drift a bit lower. Well, crop insurance groups opposed the recent Government Accountability Office report that the industry said is fraught with recommendations that would dismantle the successful public-private partnership that delivers federal crop insurance. In a joint statement, the Crop Insurance and Reinsurance Bureau, National Crop Insurance Services, and the American Association of Crop Insurers say the report contains several recommendations that will result in reduced participation in the long run. The groups say the GAO mischaracterized the economies of the delivery system when it states that the increase in crop prices did not increase the workload to sell and service the policy. They say the statement ignores the fact that since 2011, the crop insurance industry has worked with USDA to implement both the 2014 and 2018 farm bills. Both of these pieces of legislation increased the availability of crop insurance products nationwide. New insurance products have also since been developed along with specialty crop and livestock product expansion. The industry charges that the workload has in fact increased to meet the risk management needs of America's farmers and ranchers. And farm debt balances at commercial banks grew steadily in the third quarter, but loan performance remained strong in the Kansas City Federal Reserve's district. Now, despite some indications of slower lending activity in recent surveys and subdued loan demand for some lenders, outstanding debt at commercial banks in aggregate, though, grew at a pace similar to where we saw last year. Alongside ongoing strength in farm finances, delinquency rates on agriculture loans dropped for a third consecutive year and remained at historically low levels. Now, steady loan growth has coincided with a pullback in deposit growth and firmed liquidity at the ag banks. Now, profits for agricultural banks have stayed solid with support from higher interest income, and the balance of agricultural debt continued to increase alongside a growing demand for production loans. And according to commercial bank call reports, farm debt was 5% higher than the same time last year and increased at a similar pace for almost 2 years. We'll have more in just a moment.
The Kansas Ag Report brought to you in part by Kansas Grain Sorghum, growers working together. Learn more at ksgrainsorghum.org. Grass and Grain, online or in the mail, keeping Kansas farmers informed for over 60 years. grassandgrain.com.
And joining us is Dr. Roger McEowen, Ag and Tax Law Specialist at the Washburn School of Law. He joins us every month to talk about some agriculture things going through the legal system. Dr. McEowen, always great to see you.
Good to be with you, Ken. It's December already.
Can you believe that? We're, our minds think of maybe celebration, but also we think about tax implications. We'll talk about that in just a moment. But let's first kind of get into some of these things. The Dealer Trust Act, there's some situations going on there, and how broad the scope is that some of the latest there?
Yeah, Ken, this is something that was enacted just a couple of years ago, and we really don't know the scope of it yet, but we do have a case working its way through the courts. And what we're talking about here is a provision on the livestock side of things that is comparable to the grain side of things. For example, when an elevator buys grain and then subsequently files bankruptcy, before paying those grain sellers, the farmers, there is something that's known as a PACA trust. The Perishable Ag Commodity Act creates a trust, and those funds for those unpaid cash sellers of grain are held in a trust that stays outside of the bankruptcy estate, and so they get paid. And those claims aren't tied up in the bankruptcy estate, where those farmers as unsecured creditors would get paid last if it were in the bankruptcy situation. There really wasn't any protection on the livestock side of things until a couple of years ago, when there was an amendment made to the Packers and Stockyards Act to create a dealer trust, so that the unpaid cash sellers of livestock, their funds are going to be held in a trust outside of the bankrupt sale barn or feed yard or whatever the case might be, outside of their bankruptcy estate. So we do have a case on this right now. We have a bunch of unpaid cash sellers of livestock. Over 100 livestock producers have $122 million in unpaid claims against 3 cattle operations. And there's a lender that also says that one of the feed yards at issue has about 78,000 head of cattle that they didn't pay on the loans for. So the problem stems from a $175 million Ponzi and check kiting scheme, not unlike what we saw in Plainville a handful of years ago. It's kind of the same setup, but even on a bigger scale. And the issue before the court is right now is, what is the scope of the Dealer Trust Act? Is it all of the assets of the bankrupt debtor? And it very well could be in these situations, because if you've got a bankrupt sale barn, just about all of their proceeds are coming from cattle sales. So far, the USDA has only paid on $2.69 million worth of the claims, which, as I said, are a lot more than that. It's $122 million. So we'll see what the court says about that. It's a brand new law, so it's going to be the first case to tell us the scope of the act.
As we said, we started thinking about taxes as well. And the question a lot of folks have: what happens if some of those tax cuts that were in the Trump administration don't get extended and go away?
Well, there's a lot of people that are going to get a tax increase. It's what's going to happen. It's primarily going to be the middle and lower income people. Those that are currently in the 10% bracket, their rate's going to go back to 12. So that's a 20% rate increase right there. If you're in the 12% bracket, your rate's going to go to 15%. So that's a 25% rate increase. And then the child tax credit gets cut in half, because the Trump tax cuts increased it to $2,000 from $1,000. So that's a credit of $1,000 per child, which comes right off of tax liability. And if you didn't have a tax liability, then the government would write you a check for $1,700 per child, and that's going to go away too. And your standard deduction, which was doubled under the Trump administration, is going to come back down to its previous level, basically get cut in half. So you're going to have a bunch of people that are going to get back on the tax rolls with less credits if they have children that qualify for the credit, and a significantly higher tax burden. And that's going to be a problem. So Congress is going to have to deal with that by the end of 25.
We're talking with Dr. Roger McEowen for the Washburn School of Law. We talk with him every month about situations. We're going to take a quick break. A couple of other big things important about agriculture. We'll talk about those when we return in just a moment.
Kansas Ag Report brought to you in part by the Kansas Livestock Association, supporting members' business interests and meeting consumer demands. KLA.org. Oldie Seed Farms, carrying soil-specific seed. Find them on the web at oldieseed.com. That's OHLDE seed.com. And Kansas Corn, building the future at kansascorn.com.
And Dr. Roger McEowen from the Washburn School of Law is joining us, and we're talking about issues going on dealing with agriculture throughout the legal system, and one that we've run into a lot as we've gone to a lot of different organization meetings is right to repair. And there has been a recent update on kind of what's happening there, right?
Well, that's right. We've got a couple of things going on. One is at the state level in terms of legislation that's been proposed in numerous states, and now one state which has enacted right to repair legislation, Colorado. That law starts on January 1 of 2024. But Ken, basically what the issue is, as you know, is when a farmer buys new machinery or equipment, the manufacturer basically views it as a technology lease. And so the question is who owns that technology and who can repair the machinery or the equipment that's been purchased. And as I said, this has been an issue in numerous farm states across the country. The other issue that's out there with respect to this, I said there were two, and one of them is state legislation. The other one is there is a Sherman Antitrust Act lawsuit that has been filed by 17 farmers. It's in a federal district court in Illinois. And just in late November, the court declined John Deere's motion to decide the case based on the pleadings, and they're going to let it go to trial. And the claim is that John Deere has monopolized the repair market in violation of the Sherman Antitrust Act. So it's anti-competitive conduct. And so far we have found out the court has said that the farmers do have standing to sue, and they're alleging damages in terms of higher repair bills from January 12 of 2018 to the present time. So we'll see how that shakes out too. But that's also this kind of the second problem of what's going on with right to repair across the country.
Okay, and then the issue that seemingly never gets resolved, it just continues to go through and trying to find some solution. That's waters of the U.S.
Yeah, and we've got legal challenges that continue on that. Of course, the Corps and the EPA put out their rule in September. I think it was September 8 when that rule was published, which they said, well, here's the new rule based on what the U.S. Supreme Court said last May. And there's been challenges to that. They didn't go through the notice and comment procedures. They claim to have an exemption. Some of the states are complaining that the new rule takes away state sovereignty on the issue, and has basically removed a lot of what the states would normally regulate, because states do have kind of some responsibility under the Clean Water Act on these things. So 26 states are suing. Idaho and Texas have their unique claims, so it's 2 additional states there. Expect this to continue.
All right, Dr. McEowen, now we didn't have enough time to get into all the details of all 4 of these situations. So how can folks learn more about them?
Well, they can go to my blog, which can be found on my website, washburnlaw.edu/WALTR. And then down the left-hand side on the homepage, you can find the link for my blog. I also share that with K-State Ag Econ Department, so it shows up on the Ag Manager website, and also on RFD TV's site too.
All right. Dr. McEowen, is always great to talk with you. We look forward to doing this again in 2024. So thanks a lot.
Thank you, Ken.
Dr. Roger McEowen from the Washburn School of Law, and Ag and Tax Law Specialist, joins us. We'll have more coming up in just a moment. Stay with us.
Kansas Corn reminds you that E15 fuel is the right choice for every kind of driver. For the car enthusiast, E15 has higher octane. For the thrifty driver, E15 is priced lower than regular unleaded. For the nature lover, E15 provides cleaner air. For the shopper who buys local, E15 has more ethanol from our Kansas corn farms. Choose E15 for a higher octane, lower price, cleaner American fuel. Message from the Kansas Corn Commission. Learn more at kscorn.com.
Affiliates of the soybean industry in Kansas should be gearing up to attend the 2024 Kansas Soybean Expo. The annual event, set in Topeka, returns January 10th to the Maynard Conference Center in conjunction with the Topeka Farm Show. The scheduled agenda for Expo includes valuable information on research, managing risk, and weather forecasting. Participants can hear from Kansas State University agronomic specialists on the changing research landscape, learn top marketing tactics from Kansas State University agricultural economists, and understand upcoming weather patterns from Joe Loria, Fox 4 Kansas City meteorologist. To close out a day of learning, Dave Lewis Entertainment plans to amp up the fun with the Game Show Roadshow. While Expo provides growers with a preview of the upcoming crop year, it also celebrates the preceding season with the announcement of the 2023 Yield and Value Contest winners. Additional awards for Friend of Soy and Meritorious Service are presented at the luncheon. Notably, former Senator Pat Roberts, an icon in agriculture, is the invited luncheon speaker. Roberts began representing Kansas in the U.S. Senate in 1997 following a long tenure in the U.S. House of Representatives. He is the first person to chair both the House and Senate Agriculture Committees. Kansas Soybean Expo brings together soybean producers in Kansas for a day of learning, industry updates, and networking. The Kansas Soybean Association organizes the event with checkoff funding from the Commission. Expo is a free event. Registration and exhibits open at 8:30 a.m. with the program scheduled to begin at 9 a.m. Visit www.kansassoybeans.org/expo to view the agenda and register for Expo to reserve your seat. Online pre-registration is not required but is recommended to expedite the registration process on the day of Expo.
What does a brighter, more sustainable future look like in our cities and towns, and how do we get there? When New York needed an alternative fuel source to reduce carbon emissions, the city found what it needed in biodiesel made from U.S. soybean oil.
Agriculture is a significant part of the Kansas economy, so animal health is of critical importance not only to the agriculture industry, but to the whole state. That's why protecting animal health is part of the mission of the Kansas Department of Agriculture, and we make it a priority with our focus on foreign animal disease planning, training, and exercising. In December, KDA will lead a 3-day functional exercise named Pathways to practice the state's agriculture emergency response plan by playing out an animal disease scenario. In the event of an agriculture incident, the emergency response is led by the Kansas Department of Agriculture, and our incident management team develops policies and operational plans to manage the disease response and to provide factual, transparent public information and education to the industry and the public, including a phone bank to receive calls from citizens who would be affected by an incident. More than 150 players and observers helped with last year's exercise, and we expect similar involvement this year, with participants representing agriculture organizations, private industry, federal, state, and local public agencies, and even animal health agencies from other states. Responding to a foreign animal disease will require cooperation among all of these entities in order to stop the spread of the disease and enable the industry to get back to business as quickly as possible. This year's exercise looks at disease traceability in the early stages of a multi-species disease outbreak. These annual exercises have been instrumental in expanding the state's response plan and honing details based on new challenges and experiences each year. This continual improvement of the animal disease response plan supports the investment Kansas has made in sustaining the rigorous practice via the full-scale exercise, and we will continue those efforts to protect animal agriculture in Kansas.
Many seed companies claim to offer the latest genetics, but how many have tested those genetics in soils just like yours? The Oldie Seed Know to Grow research program has fully tested the latest seed genetics in soils that are right in your neighborhood. The Oldie Seed Know to Grow program can recommend the best performing hybrids from technologies like Enlist, Extend, and LibertyLink that will optimize the yield and profit of every acre on your farm. Contact Oldie Seed today.
Hi, Hi everyone, Maddie Meyer, Kansas Grain Sorghum's Program Director here to bring you the latest Kansas Grain Sorghum updates. As many of you know, we work very closely with the United Sorghum Checkoff Program, and the USDA has recently announced the individuals who will be serving on the United Sorghum Checkoff Board of Directors. And I'd like to take the opportunity to congratulate the following individuals: James Haas of Colorado, Ethan J. Miller of Missouri, Tracy Zink of Nebraska, David Shem of Kansas, Brian Adamek of Texas, and Scott Earlbeck of Texas. 5 of these members will serve a 3-year term from December 2023 to December 2026, with the exception of Earlbeck, who will serve a 2-year term, and his role begins immediately. We look forward to connecting with these new and current individuals at the national board meetings down in Lubbock, Texas, from December 11th through 14th. It's already hard to believe that we're at the end of 2023. It isn't too early to begin thinking about upcoming meetings and events that will take place in early 2024. Along with the Kansas Soybean, Wheat, and Corn Associations, we look forward to hosting the annual Kansas Commodity Classic, held January 26th at the Salina Hilton Garden Inn. We've got a great lineup of speakers and topics prepared to provide a one-stop shop for Kansas farmer leaders. I'd also like to mention that registration is now open for the 2024 Women Managing the Farm Conference. This year is also the 20th anniversary of the conference, and there are some special activities planned for all attendees. For more information and how to secure your spot, visit www.womenmanagingthefarm.com. Thank you, and stay tuned for next time.
The Kansas Wheat Innovation Center in Manhattan is rediscovering ways to get improved varieties and new genetics in the hands of farmers faster. Grower-led and checkoff-funded research initiatives are bringing about positive change. This grassroots leadership provides a strong voice in Topeka and Washington, D.C. Now is the time to partner with Kansas Wheat in moving wheat forward. Kansas Wheat Commission and Kansas Association of Wheat Growers. Farmers investing in their future and yours. Log on to rediscoverwheat.org.
The Kansas Beef Council annually hosts scientific communication training sessions with dietetic students from the University of Kansas Medical Center and Kansas State University. This year's sessions were held November 2nd through the 3rd. Each training centers specifically on protein, with beef serving as the main example. During each session, KBC Director of Nutrition Abby Hidari highlights the importance of protein in the diet and dispels misconceptions about beef's role. Then, students learn about beef production directly from Kansas ranchers. According to Alma rancher Ren Pacheco, it is important for cattle producers to connect with those who will be recommending beef to their patients one day. She said if these students have a good understanding of beef production, they are more likely to recommend it. The educational sessions also include media training focused on how dietitians effectively can present nutrition information through various channels. Additionally, students get to prepare a beef recipe, which allows them to gain hands-on experience in cooking beef while presenting the nutritional aspects of their dish. This year, the cut used was sirloin. The training ultimately enables students to apply evidence-based guidelines as they practice delivering science-based recommendations. It also allows them to make direct connections with the beef industry and gain helpful experience for their future careers.
Imagine turning soybean oil, used cooking oils, and waste animal fats into fuel so amazing it drives U.S. jobs and our economy forward. Learn more about biodiesel at americasadvancedbiofuel.com.
Morning, this is Jake McCall with Pinion Ag. As we move into December and the year end, there is plenty to watch across the board trade. Starting with the grains, each market has taken on its own concerns as corn settles into a trading range with no real story to back it up. Exports have been consistently within estimates, with 1,289,000 tons being sold in the week ending November 30th, which is down from last week but double the same week from last year. Ethanol reports showed a big week for production with 7.532 million barrels. This is the biggest production week we've seen since before August, but that pace will need to continue in order to meet the USDA's targets as we handle a fairly large carryout going forward. Meanwhile, the soybean market seems intent on watching the South American crop, which is expected to once again set records. Beneficial rains have been coming to our peers in Brazil and Argentina as we come to the critical growth period in the Southern Hemisphere over the next 2 months, and that will weigh heavily on the minds of those contemplating our own export capacity and to what extent Brazil can capture the world market once that crop is harvested. Until then, our exporters have been hard at work selling another 1,517,000 tons last week, which is down from last week, but well over 693,000 tons last year. This week on the front month January contract, we have been doing battle around the psychological $13 mark, which could prove to be an important pivot point for the weeks to come. We do continue to see flash sales to China and unknown destinations, but it is important to note that issues along the Mississippi River and the Panama Canal will provide complications to those wishing to ship cargoes to the Far East. At the Panama Canal, reduced water levels have severely hampered the traffic of Panamax shippers that can make it through the locks in a day, and grain shippers generally losing out in bidding wars to higher value shippers for the valuable spots in line. The wheat market has seen some sparks fly this week, with over 1 million metric tons of soft red wheat being sold to China in just 3 sales. This came along with some fun short covering that gave a solid rally off the lows in Chicago, Kansas City, and Minneapolis wheat markets. Whether that will continue is anyone's guess, but it was a breath of fresh air to a demoralized wheat market that has seemed to have a one-sided conversation between bulls and bears ever since wheat harvest concluded last summer. Cattle markets continue to be locked in a downward trend, with a pattern of steep moves down followed by a small recovery time and time again. In some months, we are now approaching contract lows, as this fall's move has erased many long-time gains. As many state, the old stair-step up and elevator down tendency of the market, producers are eager to see when we can carve out some sort of support for a low, but just like the high, it will be difficult to tell until after that happens. The crude market has seen a rapid fall-off since the end of November as the world debates economic strength, current stocks, and the ability of OPEC to control the price. The dollar, on the other hand, has seen some recent strength, though still holding well below October highs. If you have any questions on the markets or would like help with your own marketing program, feel free to give us a call at 888-452-8751, and we'll look forward to talking with you. My name is Jake McCall with Pinion Ag, and I hope you have a Merry Christmas season.
That's our program this week. Be social with us online, KansasAgReport.net, or our social media channels. I'm Ken Rogers. Thanks for joining us. We'll see you next week on the Kansas Ag Report.
Next time you see a beautiful field of corn, reach out and thank the farmers who work tirelessly to raise corn for livestock feed, renewable fuels, and exports to feed a growing world population. The farmers on the Kansas Corn Commission work for Kansas corn with grower-funded checkoff dollars that support foreign and domestic market development, research, promotion, and education to expand opportunities for Kansas farmers. To learn more, visit kscorn.com.